I'm going to be covering over how I go through and try to find the best things for me to trade. And it rotates. It depends on where the volatility's at, right? So I'm going to walk you through exactly how I do that. And I'm actually going to do my homework in front of you. And we're going to see if we can't find a few good things to trade while we're here. So webinar presentation usually takes about 45 minutes to an hour. And then if you'll hold your questions till the end, that'll help me not get down a rabbit hole. So we're not here for 2 hours. I don't take anybody else's time. And then you can ask as many questions as you want after. And then we are also going to scan all the markets, all the futures markets, and then the S&P 500, see if we can find some new trades. But before we do that, I need to make you aware of a warning disclaimer. So warning, danger, Will Robinson. Trading can be hazardous to your health and your wealth. You're probably going to lose all your money trying to figure out how to do this business, right? So I at one time was a registered Series 3 and Series 30, 3 and 30. I think I've let my license lapse just because I'm tired of all the BS that I have to go through in order to keep them. But I did it because I had a futures IB, and I would either own or lease seats on the exchanges that I trade at. And you don't need a license for any of that stuff. So it is very important that you read the important notice here and the CFTC Rule 4.41. Hypothetical or simulated performance results, past performance results are not, there's no guarantee of gains. In other words, you should never trade with more money than you can afford to lose. You should only trade with discretionary income. And then I like to make the warning disclaimer a lot harsher in order to scare you. That's right, Lost in Space, too. That's right. Your trading career will probably end up like a bad country song in reverse. Your wife is going to leave you for your best friend. Your kids are going to grow up to hate you. Your dog's going to die because there are no cats in country songs. They're going to repossess your Ford or Chevy pickup truck, and they're going to foreclose on your single wide or double wide trailer. You understand the disclaimer that I just made you aware of? Give me another yes in the chat box. That way, if the CFTC or NFA get a hold of this recording, they'll be like, well, he did a solid job. He tried to scare him to death. All right, so I just want to make sure I'm CYA covering my ass, right? All right, so let's get started. My name is Hubert Senters. I'm known in the trading and investing niche as a guy that has a no BS approach to investing and trading. I don't know if it's by design. I'm just a really simple guy. I'm dyslexic, so I have to learn things in a slightly different way than most people. But usually I can, after I learn them, I can usually take a complicated subject and figure it out and then also teach it halfway decent. So that's what we're going to do today. So now that I've already gave you the warning disclaimer, I'm going to give you a brief history of myself, and then we're going to get right into the content, all right? So when I was growing up in the hills of Eastern Kentucky, there were about 4 or 5 things that I had available to me. Number one, my mother and father were both factory workers at a company called American Standard. You've probably seen their faucets, the commodes, sinks, plumbing fixtures, stuff like that. And that's how they kind of provided for me. I worked there for a summer, and I hated it. I'm like, I had to put this little bolt on this little flange 4 times, 4 little bolts on 4 little flanges. I'm like, oh, my God, I'll kill myself if I have to do this for 40 years. So I decided not to do that. But like I said, both my mother and father were factory workers there. Now, in Eastern Kentucky, I could have went into the coal business, but you got black lung or you have collapse, drowning, or electrocution. I was like, not my gig. Could have went into the weed business, the marijuana business. I decided no, probably wouldn't end well for me. The meth business is a big business in Eastern Kentucky, and or the moonshine business. All 3 of these, if I would have done them halfway decent, which I probably would have landed me in the federal penitentiary, sharing an orange, in an orange jumpsuit, fighting Bubba over who gets the bottom or who gets the top bunk. So I decided not to do that. So when I was about 17, I decided to start my journey, and it ended up like everybody else's. My end goal was I wanted to make a lot of money, right? And a lot of money is different to everybody. Some people think 100,000 is a lot. It is. Some people think 20 million is a lot. It is. So it took me a while to figure out how to do that, to go from 17-year-olds to make my first $1 million. And heads up, if you've never made $1 million, first $1 million is always the hardest. The second, third, fourth, and fifth million are a lot easier. I've never seen anybody go from point A to point Z, whatever your goal is, in less than about 5 to 8 years. And that's on the fast track. I've also never seen anybody just kind of do this, like gradually get better over time. It seems like all the interviews that I've done and all the masterminds that I've been a part of, there's been about 3 people that just got lucky and were smart enough to figure out that they got lucky, and they just added fuel to the fire. All the rest of us had enough failures to where we just kind of got mad and pissed off enough to go like, all right, I'm going to figure this out. And then we all had this real weird spaghetti bowl of a journey that, ends where we're trying to go to. All right. So when I was growing up, I watched a lot of Ghost of Mr. Chicken, Scooby-Doo, and Batman, and I loved the little bookcase secret doors that led to their secret hideaway. Now I was like, man, if I ever make it, quote unquote, enough money, I'm going to have the big house on the hill, and I'm going to have those bookcase doors that lead to my office. And that's how my commute is now. It's about a 5-second commute downstairs, and there's this hidden bookcase door that you pull this book and press that button. It's not a secret because I tell everybody on webinars. And everybody that comes to the house like, hey, I want to see the doors. I've actually got 3 of them here at this house. And then you open up, and it's about it's either 1,500 or 1,800 foot office that we all work in here, me and Jared and Karen, and then all of downstairs is basically business, and all of upstairs is a residence. So we've got, shuffleboard tables, jiu-jitsu mats, a gym, sauna, stuff like that. And we all just work down here and just have a good time. So I don't tell you any of that or show you any of that to impress you, because number one, I don't think it's impressive at all. I tell you and show you all this to impress upon you that if a fat redneck from Kentucky can be successful, then I think you got a shot too. Now, it's going to require a lot of blood, sweat, and tears, and you're going to have to put in your time, and it's a ton of work, all right? So congratulations. You're at the right place at the right time, and here's why. I'm going to walk you through it. What type of charts do you use? Just a real quick survey here. Do you use line charts, bar charts, candlestick charts? What is the number one charting methodology that you currently use? Is it bars, candles? Okay, all right. So this is candlestick centric, all right? So it's candlestick. So, and I'm going to be talking about Ichimoku. I'm going to walk you through. If you're a charting fan, you're really going to like this. But before we get started, let me tell you what this works on, okay? What does this work on? It works on stocks, options, futures, forex, bonds, gold, and a lot of commodities. Now, it works on some things better than others, as you would imagine. But let's walk through what time frames it can be useful on. It can be useful for day trading. It can be useful for swing trading and or investing, all right? So it's good on all those time frames. Now, this will be a different webinar, but in a good way. I like to cut up and have fun. I think life is too short, and I've never met anybody that gets out alive, so you might as well have fun while you're here. So we're going to have fun on this. But before we get started in that, let's talk about the back testing results of this methodology. You can call it a methodology, you can call it a strategy, a tactic. I don't really care what you call it. I'm going to show you how I use it to find stuff that's going to increase the odds in my perceived value of, hey, I've got a better edge here. I should trade this and do away with that other thing. So on the S&P 500 on the last 5 years, if you did all the stocks and the indexes, it worked on 430 out of 500 stocks. So that's not bad. It's about an 86% hit rate. Like I said, it's not successful on everything. So looks like there's about 15% of the stocks in the S&P 500 that it just didn't work on over the past 5 years. It would have given you a 33% return if you took every single trade. So in other words, if you took the long, then the short, then the short, then the long, and then the short, and then the long, if you took every one, your return would have been 33%. Now, if you just use a little common sense and filter out the counter trend signals, if you wait for a confirmation, then you can increase your rate of return from 33% down to or up to 79%. So we're going to remove the counter trend results, and we're going to do it by a 3-day or a 3-bar confirmation. So here's all I mean when I say that. Let's say we're in this massive uptrend, okay, and we've got an established trend line. We're going to buy on the breakout and the pullback, but we're not going to short here and cover here, short here and cover here. That's craziness in my opinion. So what we're going to do is we're going to stay on the overall, the strongest trend in the longer time frame. That's going to increase our odds of making money. It's going to take us from an increase from 33 to 79%. And then I'll show you how you do that confirmation in just a second. Now, it's been profitable on 29 currencies over the last 10 years. Daily, hourly, 10 minutes. So this is the time frames I like to use: daily, 60-minute, and 10-minute. Now, if all 3 of those are in agreement, I know I'm good to go. If only 2 of those are in agreement, I can still do it. Now, if they're all wishy-washy, then I'm just like, okay, I got too many crosswinds here. I'm just going to leave the thing alone. So let's talk about time frame selection. Let me grab, there is an audience view and go to webinar. I'm just trying to grab it. Does your slide say time frame selection? It's a blue slide and it's got time horizon, scalp, very short. Is that the same? Is everybody looking at the same thing? All right, cool, perfect. So I'm going to go under the assumption that we're all going to be using the same time frames. Now, I know we're not all going to be. I understand that. But my favorites that I've used that's back tested well has been the daily. Okay, so the daily here. The hourly. All right. And then the 10-minute. And this says 10/5, so you can use it for one or the other. Now, if you want to go on a longer time frame, like weekly, monthly, or 3 months, knock yourself out. If you want to go down to below 5 minutes or into tick charts, knock yourself out. You can do it. It's just not my thing. So on a daily time frame, the cloud is going to extend 1 month, so 20 to 30 bars to the right. My time horizon for this trade setup is I'm going to be in it at least probably weeks of time, so minimum of 2 weeks. So if you're an options trader, then you'd want to trade monthly options off of a daily chart. Now, if I'm looking at an hourly chart, then the cloud is going to extend 3 days, and I'm going to be in this trade for multiple days, usually, 3 to 21 days at a time, depending on the outcome of if I get stopped out or if I don't get stopped out, right? If I'm looking at an hourly chart, then if you're trading options, you'd want to trade weekly options on an hourly chart. Now, another lower intraday time frame is a 10-minute time frame. It's going to extend to the right of the chart 4 hours, and I'm going to be in this trade for, anywhere from 4 to 24 hours, sometimes 48 hours. Does that make sense? So the first thing we have to figure out is, what's my time horizon? What's my goal? How long am I going to hold it for? It's not to lose money. Good luck with that. I've never met anybody that's never lost money in trading. So my second thing is I'm going to try to control my losses and figure out what my overall objective goal is. So I'm going to do daily, hourly, and 10-minute. Like I said, if you're going to go super small, you can go down here. If you're going to go longer time frames, you can go over here. And then I know that about what I'm going to future cast here to the right of the chart is going to help me determine what I should do. Now, when I'm looking at this is what you want right now, and this is why. It is the #1 technique used in Japan. You're going to know exactly what's happening in seconds. Now, this is the #1 best-selling book in Japan, I think 7 years in a row. It's on technical analysis, and this is the major strategy that was there. Now, if you've never tried to translate English, or I should say Japanese to English and English to redneck, it can be complicated, confusing, and very expensive. So be careful with that. It's designed so that you can see really crystal clear signals, and you can find trends and bottoms and tops. Now, it's not going to show you the dead bottom and the dead top. It's going to show you trend reversals. This is the edge for you now. You've probably had indicators. Has anybody in there had an indicator that showed you what has happened in the past? Give me a yes, or you can give me an amen on that one if you want. Yes or amen, either one will work. Everybody's seen that, right? And it's about useless, right? Oh, that's what happened in the past. That's going to help you zero. Some indicators are a little bit more useful, and they'll tell you what's going on right now, right? It's like, all right, this is what's happening actually right now. And then a very few indicators will tell you what might probably, potentially, maybe happen in the future, right? Now, 3 of the ones that I like for the future are, I like Fibonacci's. I'm a Fib fan. I like those on the extensions and the projections. Elliott Wave. I'm not a huge Elliott Wave guy. I'm buddies with Todd, and if I have a problem with Elliott Wave, I just call Todd. Only thing I don't like about Elliott Wave is if you put 10 practitioners of Elliott Wave in a room and go, all right, well, what's the count? I'll be damned if they don't give you 7 different counts. I'm like, that can't be that useful. I'm not saying it's useless. I'm just saying they're all taught a little bit different way. So Elliott Wave can be useful if you know how to use it, but you better get trained on it properly. And then the last one here is going to be Ichimoku, and that's the one I'm going to teach you about today, which is Ichimoku. So let's get started. Do you have a black background with some candlesticks and a couple of blue, looks like a blue stream rolling through the chart from the lower left to the upper right? Does everybody see that? Type in blue if you see a blue little squiggly thing. Yeah, blue and orange. All right, cool. So we're going to first cover the major concepts of Ichimoku. And I wish I invented this thing. I didn't. I'm not here to sell you an indicator. This indicator is freely available on almost every chart platform out there. At the end of the presentation, I will give you the opportunity, if you want to invest in more knowledge on how to properly use this, I'll give you the opportunity to do that. But you can figure out a lot of this stuff by just watching this presentation. All right. So number one, if the price action is above the blue thingy, then we want to be bullish. All right. So this is the blue thingy. This is called the cloud, C-L-O-U-D. And if the price action is below the blue thingy, we want to be bearish in nature. So everyone type in your chat box here, just go type in cloud, C-L-O-U-D. That's what that blue thing rolling up through the screen is. That's the cloud. Above the cloud, we want to be bullish. Below the cloud, we want to be bearish. That's the first major concept of Ichimoku charting technique. The second thing is this thing's going to act like a real-time support and resistance, and it's also going to forecast, or it's going to predict where the price action will go in the future. So you can see that the slant of this is about a 45-degree angle, maybe a little bit less, you know, and it's trading sideways to slightly higher, and it's going, okay, if this thing was to sell off, it had better bounce off of here or bounce off of here, or it's in trouble. And if you close down 1, 2, 3 days below the cloud, well, heads up, we need to short the fire out of that thing, okay? Now, this cloud is going to act like a nice little support area, and it's either going to be one of three things are going to happen. Nice little fluffy pillow or a cloud, mini trampoline, or won't work at all, okay? So, nice little fluffy cloud, mini trampoline, didn't work so hot. Nice little fluffy cloud, mini trampoline, mini trampoline, mini trampoline, right? So, if we look here, 1, 2, 3, 4, 5, 6, 7. So it was decent at 6 out of 7 times. Is it that right all the time? No, it is not. That's just an example to show you the theory how Ichimoku works. Now, so we got this first thing. So I'm going to quiz you along the way. So what is the blue thingy called? What's the blue thingy called? What was it called? Cloud, right? C-L-O-U-D. All right. I'm going to label all these. C-L-O-U-D. This thing here is called the turn line. Now, they have Japanese names, but I will butcher them and sound very unintelligent, so I just translate the Japanese names to English. So you got cloud. Now, second term you need to know is turning line. So type in turn, T-U-R-N, T-U-R-N. All right, now this is a 9-point midpoint average. It's not a 9-point moving average. They're actually different. But if it helps your mind think about that, think of that as a 9-point moving average, even though it's not. It's different. So the turning line is going to act like your fast line or your fast support. So right now it's saying, hey, and this is just an old chart of the S&P. It's going, all right, this should hold. If this doesn't hold, I've got support here and I've got support here, right? Now there's sometimes where it will break down below the yellow line. And the next thing that you're going to learn is the standard line. So we've got these again. Let's do these all again. C-L-O-U-D. We've got the turning line, T-U-R-N. I'll label this. That's a 9. And this is a standard line, S-T-D. And this is a 26-period midpoint average, which is totally different than a moving average. So just type in S-T-D, S-T-D. So that's the standard. So if we break the yellow line, we're probably going to go to the purple. If we break the yellow and the purple line, we're probably going to go to either the top of the cloud or the bottom of the cloud. Heads up, if we drop below the cloud for more than 1, 2, or 3 days, well, then we're probably going to get smoked to the downside, and that's a new massive sell. That's a short, okay? So we've got cloud, turning line, standard, and the last thing is the lagging line. So we've got cloud, C-L-O-U-D. We have the turning line, T-U-R-N. We have the standard line here. And we have the lagging line here, and the lagging line is the lagging line because it lags price action. This is the only thing that's laggy of this indicator. Now, here's why I love this indicator so much. Number one, it's free, so everybody can use it. Number two, it's kind of like the ghost of Christmas past. It's going to tell you what's happening in the past, the present, also known as now, and or the future. It's actually going to forecast what's going to happen. So it's saying, hey, the structure of this market on this PowerPoint chart here is going, it's very strong. The yellow is holding it. It respects it a lot. Sometimes it'll dip down here to the purple and sometimes all the way to the cloud. So we need to be a buyer here with a tight stop. If that doesn't work, we need to be a buyer here with a tight stop. If that doesn't work, this is our fallback points. And if those don't work, well, heads up, we're just wrong. Now we need to start shorting things, right? But our objective, since we have a very good solid uptrend, is we want to buy on pullbacks to the turning and the standard line. Now, I don't buy so much on the turning line as I do the standard line. I like the standard line. For me and my personality and my style, I like the standard line better than the turning line. And then top of the cloud and the bottom of the cloud, because this is a little bit wiggly for me. It's a little bit too fast, all right? So that's why I like it so much. All right, let's go through some of the signals that you can use with this strategy. But before we do that, let's figure out how these numbers are all calculated. The turning line is the midpoint calculation where you take the high and the low of the last 9 days and you divide that by 2. It sounds really complicated. It's just not. So what you're going to do here is you're going to take today. You're going to count back 9 bars, 9, 8, 7, 6, 5, 4, 3, 2, 1. You're going to locate the low in that range, and you're going to locate the high in that range. In this example, the low is 434.39, and the high is 465.75. We're going to add those two creatures up, and then we're going to divide them by 2. All right, we're going to divide it by 2, and that's going to come out with our magic math right here at 450.07. Now, you don't have to worry about any of that stuff. Most charting platforms will do it for you automatically. So you can see right here, this little red line right there, that's the turning line. It's 450.07. Now, remember I said if we are above the cloud, we want to be bullish. If we're below the cloud, we want to be bearish. Now, notice we came from below the cloud into overhead resistance, and we're about to break the line. If we break this turning line at 450.07, next place we're going to go is the bottom of the cloud. And then after that, we're going to drop right here to the standard line, which is calculated at 425.42. So all we're doing is we're waiting for a break of 450.07, tight stop loss, and the target of 425.42. So let's take a look at the standard line. The standard line is the midpoint of the high and the low of the last 26 sessions. You're going to take the high and the low of the last 26 bars. Then you're going to divide that by 2. Same thing, just different numbers, right? That number is the midpoint. So all we're going to do is the same exact thing. And remember, the price, the line that's closest to the price action, that's always the turning line. The one that's second closest, that's always the standard line, the STD. So we start with today. We go back 26 bars. These are daily charts, but you can use intraday. All right. So what we're looking at here is there's day 1, there's day 26. Here's the low of that range. There's the high of that range. We take the high and the low, add them together, and divide it by 2. All right. So that's going to give our number of 425.42. So what we look at here is we're saying, okay, this is bearish because, number one, the cloud is red and the price action is coming below the cloud, and then we're breaking back down. So if we break this red line, we're probably going to act, this green line here is going to act like a magnet and attract that price action down here to 425.42. All right. Let me see here. Cloud span A, the midpoint of the turning line and the standard line shifted 26 bars forward. So all that means is we're going to take the turning line and then the standard line. We're going to take the midpoint. We're going to shift it forward in the future, and that's going to give us a piece of the cloud. Same way we do it here. Turning line, standard line, midpoint, shifted forward 26 bars. There's part of the cloud. Cloud span B is going to be the midpoint of the high and the low of the last 52 sessions shifted. All right, 26 bars. So all that means is we're going to take today's price action. We're going to go back 52 bars. We are then going to use the midpoint. We're going to shift that in the future 26 bars. All right, the lagging line is the simple, easy one to calculate. The lagging line is the price line closed, shifted back 26 bars. So all you're going to do is you're going to look at this and you're going to say this is today's price action. You're going to shift it back in the past 26 bars. Now, Ichimoku cloud charting signals. Lagging line crossing the cloud. This is the strongest, but it's also the slowest signal. Price crossing the cloud. This is your Goldilocks trade, and this is the one we're going to be talking about in depth today in this webinar. Okay, it's not too fast, not too slow, it's just right. Price and lagging line touching the cloud spans crossing, the turning line crossing the standard line, which we call crisscross. All right, so let's go through a couple of these examples why you may want to use the Goldilocks trade at first. So in this case scenario, this is the lagging line. We had and this is an old chart of Apple. Don't let that freak you out. I'm going to use nothing but live charts at the end of this presentation, and we'll go through exactly what's happening in the market, and I'll actually show you another way to filter out to tell you which markets to trade and which markets to avoid. We're just going to use another filter mechanism for that. So on the lagging line right here, we've got a cross below the cloud. Now, if you remember how it was calculated, it's delayed by 26 bars, so it means you'd have to count about 26 bars. So about right in here is where you would short that, okay? So let's just call it 580 or 590. And then we'd have to wait for the lagging line, this blue line, to cross back up here, which would mean we'd need about 15 more bars, right? So from about 580 to 590 down to about 520, that's how much money you'd make in that short if you shorted it there. And you've left a lot of meat on the bone. Okay, so a better way, in my opinion, to do it is to let the price action close below the cloud. Now, this is how I do it. You can use more or less than I do. I consider 1 to equal aggressive, 2 to equal a moderate signal, 3 to equal a conservative signal, and then if I can also at the same time get the lagging line to cross, and we'll go through tons of charts, we'll find some of these, then that's going to be a plus signal, aggressive plus, moderate plus, conservative plus. So now all I have to do is I'm going to short this at either bar 1, 2, or 3 below the cloud, and now I can cover it at bar 1, 2, or 3 above the cloud. So now I'm shorting it at, let's say, 620, and now I would be covering, let's just say, worst case scenario, 490. I made way more money on this trade, almost 3 times the amount that I did on that last trade. That's why I say I like the trade a little bit better. Now, you can also do some quick scalps on the lagging line touching the cloud and the price touching the cloud. You can also do trades like the crisscross trade where the turning line and the standard lines are doing a criss and then a cross. I would recommend that you only do it in the direction of the overall trend. That'll help you increase your profitability, in my opinion. So let's walk through some bullish signals. Price above the cloud is bullish if it's above the cloud, obviously. Price in the cloud are bullish if they come from the bullish side. The lagging line crossing the cloud is the main signal of trend change. Price crossing the cloud is an earlier but less reliable warning of trend change. Price and the lagging line will often find support at the cloud's edges. Cloud spans crossing may be a sign that the trend is changing. Be on the lookout for thick clouds after a run, which could mean a trend reversal, okay? Now, I'm going to grab a quick drink of water here. I'm going to let you read the bearish signals. Once you have read them, just type done in the chat box really quickly. And John and Michael, I see your questions. I'll get to them at the end of this presentation. Go ahead and read the bearish signals. Once you're done, tell me you're done. Okay, all right. Okie dokie. Let's get a few more people here to type in done and we'll move on. All right. All righty. Let's see here. Time frame selection. We went through this. Is very, very important. Mine are, my favorites are daily, hourly, and 10-minute. Daily, hourly, and 10-minute. Okay. You can pick your own favorites. Those are the favorites that back tested well for me, and those are the ones I use on a consistent basis. A multiple time frame analysis. Once again, my favorites are daily, hourly, and 10-minute. You can use whichever ones you want. Best stops to use. I'm a huge proponent of parabolic SAR. Once again, a free indicator that's available on most platforms. Anybody in here suffer from the disease of being a serial killer of profits? In other words, you get in here, right here at the X, market goes up, and then comes all the way back down and stops you out at Y. You might do that. Or you get in here at X, and as soon as it goes up a little bit, you cash out, and then the thing runs on without you. That's called being a serial killer of profits. It's very common. Parabolic SAR will fix most of those issues if you know how to use it properly. It just takes a little training on how to use it properly. All right. So let's dig in here to some actual real live trading charts. Okay. So what I'm going to do is I'm going to walk you through how I would do my own internal homework and go through this stuff and then show you how you can do it too. Well, I'll go back and forth. I'll do first, because I've trained you enough to make you dangerous. Let's go right here. I'm going to use a daily chart. Okay. You can use whatever time frame you want, but let's go through. Now, here's one filter that I would highly recommend that you add to it that'll help you increase knowing what to trade and what not to trade. So the one market I would add, or the one thing I would add would be an ADX. If the ADX is above 20, so I'm just going to format this really quickly so we can see it, then we want to trade. If it's below 20, then we don't want to trade that market, if at all possible. Okay. So here you can see is right now on the S&P, should we be bullish or bearish here on the S&P 500? And this is S&P E-minis. Yeah, we should be long, right? Now, unfortunately, you can see that the ADX is since June is going, hey, this thing is sloppy and choppy. You probably want to avoid it. It's not trending well. On the ADX is a measurement of a trend. What's the difference between ADX 20 and 14? Those are just the settings. So my threshold line is 20. My setting here, I'll show you what my settings are. So on my inputs, the ADX length is 14. It's a 14 look back period. And the trigger level is 20. So when this yellow line drops below that green 20 line, it's going to turn red and say, hey, you shouldn't be trading that market. Okay. So now, if you held a gun to my head and said, okay, well, you have to. Okay, well, I'll trade it on the long side because it's above the cloud. Does that make sense? Does everybody understand that? If this is yellow above this green line, it means it's trending. If it's red below the green line, it means it's non-trending. I'm probably going to just chop myself up to death. All right, let's take a look at the YM. What should we be doing on the YM? Long-ish as soon as the ADX comes back above the threshold line of 20, but it's still long. And you can notice, look here, boom, boom, boom. It's kind of flatlined there. What about the Nikkei? A lot easier, right? Nikkei, we should be short. It's trending lower, so we want to be short the Nikkei. What about the Russell? This is easy. This is the old Russell symbol. Should you have placed a trade in 2017 in the Russell? No. The ADX is pathetic. It hasn't been not one time above. ADX has not been above 20 not one time, so you should have avoided that. Now, if you're sitting there going, yeah, but I want to trade it. Okay, it's going to be painful just because it's not trending. So all you have to do is use ADX in complement with Ichimoku, and the Ichimoku, once it tells you it's trending, then Ichimoku will tell you the direction. So let's see which way the NASDAQ is going right now. NASDAQ is non-trending, but it's in a higher mode. So if we were forced to trade it, you know, now let's just discount this right here. Let's just say this was not taking place, and let's say this was not taking place, and this nice little trending from May to August, what direction should we have traded that market in? Pretty simple, right? High side. All right. So far on all the indexes, we should only be intraday scalping them and not swing trading them at this point, according to that. But the Nikkei, we could intraday scalp and swing trade it to the downside. Now, let's talk about the DAX. The DAX is going lower, but it's non-trending, okay? Going lower, but non-trending. What about the Euro Stoxx 50? Going lower, but it's non-trending, okay? Well, what about the Bund? Oh, here we go. It's easy. So it just broke above 1, 2, 3 bars above the cloud back here, and it was trending. which direction should you play that in? It's a no-brainer, right? Higher, and it's trending higher. Now, we just ran into some overhead resistance right here, right? You can see that. So we got to work through that. But that's going to make our 10-year, let's start with our 30-year note. It's our 30-year bond. So the 30-year bond just started trending again right back in here, all right? Think right there. So we want to focus on the long side of things. And which way is the bond market forecasting its movement? The future projection of the cloud is going, I should be going higher. Look at that angle of attack on that projection of that cloud. Does that make sense? Now let's just take a look at the 10-year. 10-year is trending higher. So now what you should be doing when you're doing your homework, you should be going, okay, heck with the indexes. They're not trending well right now. I should be short the Nikkei. I should be long the bond. I should be long the 30-year bond and the 10-year note. Okay. What about the 30-year? 30-year, same thing. 30-year should be long that. So you see how it's fairly easy to go through in a systematic fashion and find things that are better to trade than others. And now the cool thing, I'm going to show you what TradeStation will do for you. It'll make it even easier. I can format this and just make the cream rise to the top. Let's go through the futures markets. GC here is trending higher. So we should be trading gold to the long side. Check this out. What do you think you should be doing on copper? So copper crossed back here, and every time it touches the yellow line, boom, it's bouncing off of it. Trending higher. Everything looks good here on copper. Platinum trending higher. Another good market to trade right now. Silver trending higher. So that's another good market. Let's take a look at crude oil. Where's crude oil at? Crude oil is just crossed above the cloud, but it's non-trending, so we should leave it alone. There's other markets that you may or may not trade. Let's take a look at feeder cattle. Should we be trading feeder cattle? No, we should leave it alone. The ADX is below 20. What about live cattle? Yes, live cattle, it's trending, it's above 20. It's below the cloud, that's a short. What about lean hogs? Lean hogs, yes, it's trending lower. That's a short. Another simple trade setup. Corn, trending below the cloud, lower. Okay, if we go into wheat, trending lower. But if you compare that to soybeans is non-trending. So we're going to leave that alone. And you can do that with all the markets. Now watch how easy it is to find stocks. I'm going to go down here to the S&P 500. And I'm going to double left click, and now I can go, okay, now this is APD, which way should I, this is saying it's newly below the cloud, okay? Now, why would I not trade this? Because the ADX is below the cloud, so I would leave that alone. Now you can see it says new below, new below, new below, new above. Now you see where the ADX is 20? I know that this is a good trade, that's a good trade, that's a good trade, that's a good one, and that's a good one. So I can just skip down here to CBG. That is a fresh short that should break down substantially lower, okay? Now I can go ECL. This is a new fresh short. I can add it to my watch list, right? Okay. And then if I wanted to look at MSI, I could. It's not perfect, but I could probably still pull it off, right? So it says it's non-trending, but it's a one-day break below the cloud. That's an aggressive move, right? If I had 2 or 3 more bars and this lagging line went with me, I might be able to discount the ADX only being at 1666 instead of slightly above 20. So now I'm going to bop down here to SHW. That is a short and newly below the cloud. Now we're going to pop down here to new above. ETFC, just on the cusp of being trending at 1957, went into the cloud and popped above it. So that's a new fresh long. Ford, a new fresh long. See how easy that is? New fresh long. What do the blue and orange price locations indicate? I don't know, John, what they indicate, tell you the truth. I don't know what the orange and the blue mean. I never use them. All I'm really filtering for is newly above or below the cloud and if the ADX is above 20. Ford, brand new fresh sell signal. Now what is this? This is an aggressive what? An aggressive plus because the lagging line is already above the cloud. So this is a little bit better signal. So I know I could trade Ford right now. I could trade it tomorrow or the next day and then potentially let it go higher and higher and higher and higher. Right? Now, you may be saying, well, yeah, but how useful is this? This stuff is really useful. I have a running list of things that I have moved from a new fresh long signals to a continuation of longs. Can you do this with Forex currencies? Yeah, you sure can. I can do it on all the currencies right here. You can just go like it's right here, like new above, and you see British pound is a new fresh long. Okay, I don't have any new signals here, but you got the New Zealand dollar here is in the cloud. But yeah, you can do the same thing, and it actually works better on currencies than it works on a lot of stocks. Joy. So yeah, now. So you can obviously see how powerful that is. And then what I do is I just make a list of things that I like. So last night when I was doing my homework, I noticed this one was a fresh long, okay? This is BF.B. Those were a fresh long last night. And look, it went up again today. And then I also had a new fresh, these are the homework that I did last night. And I was like, okay, ALL was a fresh short. That's like the little storm in the going on right now, headed our way, and the one in Texas, that's one of those plays. Johnson & Johnson was a fresh short as of yesterday. LNC was a fresh as of yesterday. MPC was a fresh short as of yesterday. NLSN, NSW, and TMK. Now, I can also, if I'm looking at stuff, I can do continuation longs and shorts. So when I'm doing this stuff, I'm also looking at the continuation to either the high or the low side. So I know to leave that alone. I know this is a continuation along. I know gold's good. I know copper's good. I know the Mexican peso is non-trending. I need to leave that alone. Platinum's all right. Apple's pretty solid, although it's pulling back here. So let's take Apple, for example. Apple is 1949. It's not trending perfectly, but I would do a pullback. I would be a buyer at 156.68. When do you define, when do you take definitive action on a continuation or short? So what this list is made up of, in the continuation, I have moved all my new ones. If they're on the new list, it's anywhere from 1 to 5 days. Once they've been in a long signal for 5 days or more, I move them up to the continuation long. And then after that, I can start doing pullbacks to the turning line and the standard line to keep myself in check. Like ISRG, next time this bad boy touches the turning line, I'm all over it like a fat kid on a candy bar, right? Now, the cool thing about this is most platforms have these type of things. So if you don't, I'm gonna walk you through a very, decent scanning software that's free. So does everybody see a thing that says stockcharts.com? Does everybody see that? All right, so watch this. So let's say you don't have TradeStation or TOS or anything that scans decent. Well, you're going to go to free charts. Free charts. Okay. And then you're going to scroll down to the right, and it's going to say predefined scans. Does everybody see that? Free charts and then predefined scans. You're going to left click that one time. Now you're going to scroll down, and you're going to go all the way down here to candlestick patterns, and you're going to go all the way to the bottom where it says Ichimoku patterns. And then what you're going to do is you're going to hold down your control key while you left click. See where it says moved above the cloud, move below the cloud? We're going to hold that left click and hold that and left click. I'm just going to open up different tabs here for me. Now I'm going to sort this by the exchanges. And I'm just going to look at NASDAQ stuff. So now I know, as of today, with their scanning software, you've got BHBK. Actually, here's one right here. Let's do Beacon Roof and Supply. It's probably a hurricane play right there. BECN. Now, all I'm going to do is I'm going to click this little graph over here and hold down control, and that's going to give me my predefined trade. Now, all I have to do is I have to fix this thing, okay? I just have to scroll down here and go simple moving average. I'm going to make it to Ichimoku full. Simple moving average. Remove that. I really don't need any of this other stuff right now. You could use the ADX on it if you want to add it to it. But that's just going to distract us for now. So I'm just going to remove everything. And then I'm going to hit update. There you go. What is that? That is an aggressive long signal on BECN. Now, I was just scanning earlier of just S&P 500 stuff, right? This is going to scan everything in that universe of stocks, and that was NASDAQ, okay? So that's free. It won't cost you a dime, right? Now, I don't think they have futures, but they do have stocks. And then you just have to go through and just go, okay, let's see what else I got here. And you add that to your watch list. If you want to trade something a little cheaper, you go CERS and just go right-click copy, right-click paste, come in here, copy, paste, boom, updates, boom. There's a long signal right there. CERS, okay? Does that make sense? Pretty simple and easy to use. Let's see if we can find a few more for you. All right, and I'm not cherry picking. This is all just live, right? So the first part of the presentation was all canned, perfect, 100% theory to teach you how it all works. And now we're actually doing the live stuff of how you actually find decent stuff that is now in a new fresh uptrend or a new fresh downtrend. So that's all we're doing. Here's checkpoint CHKP. I'm gonna go copy. I'm gonna put over here my little chart box. And then, boom, I'm in it right there. That's a new, fresh, long. And it's a little sketchy because it's not perfect. So I add that to my watch list and just track it for a couple days. Let's see if we can go over here and find some new predefined sells. I'm going to short by the exchange. And then I'm going to go down here to the NASDAQ, and we're going to do, let's find one that's a little bit higher dollar. Let's do this one right here, Marriott Hotels. Oh, no. Okay, we're going to come over here. Marriott, dink. There you go. New fresh signal on Marriott Hotels. Now, if we go just from the top, let's do it right here. Let's go AQXP. We'll put this right here. Boom, shakalaka. All right, AQXP. That's a new fresh sell signal. And the lagging line is already down there, so it's a fresh, aggressive plus signal. Let's see if we can find a few more here. Okay, we got, let's try this right here, CLLS. All right, CLLS, and go right here, and then let's see what it gives us. Oh, look at there. That's a gap down and then back into the cloud. I would leave that one alone. I'm not a huge proponent of things that are that gappy. I would pass on that one. I'd just be like, too risky for me. All right, I'm kind of risk averse. I don't like a ton of risk. Let's look at FFWM. See what that looks like. Okay, boom. Oh, it looks a lot better. This one's going to go lower. So the high was up here at 18. It's now breaking the cloud. Lagging line is following along. It's not aggressive. I mean, it is aggressive, but it's not a plus signal yet. So you would short this one with a stop of 17.12, and the target would be 15.50. So does it make sense? Pretty simple and easy to use, straightforward. You just got to use a little common sense. Now, what I'm going to do is I'm going to go back to my PowerPoint, and then we'll spend some time going back through those markets and stuff. And if you have some markets you want me to look at, and then if you have any questions, just let me get through the rest of my PowerPoint, and then I will answer every single one of your questions. And we'll also look at some symbols that you want me to look at. So success stories. The course was awesome. I've taken one bond trade and made over $900. Do you think I'm happy? I just entered the bond trade. Shorted again where I took profits earlier today after you made me greedy for possible further drops. I'm happy dancing. I've never happy danced in my life, but it sounds exciting. This is the first time I've had a successful trade during a course. I have the hardest head in the world. You couldn't have made it simpler, Mary. Here's one from Greg. I don't know who says dude anymore. I guess Greg's one of those guys. Dude, thanks. You're likely the only reason I've kept at it with trading, and now that I'm profitable, I can't thank you enough. It was really great, and I can't wait to attend the gold trading class. Thank you so much for all you do. Here's just another one from Ron saying that he likes our courses and he learned some stuff from us. Will you be our next success story? I'm inviting you to join us. Now, obviously, I cannot guarantee your success. This is the real world. There are no guarantees in life, and there damn sure are no guarantees in trading at all, right? We're speculating. They don't call trading guaranteed wealth generation with zero risk. It's called speculating for a reason, all right? All right. So who is this not for? If you're a holy grail seeker, if you think you're going to take $5,000 and turn it into $1 million by the end of September, that's a very unrealistic expectation to put on you, the market, and me. So if you're that type of person, please never buy any of my stuff. If you suffer from hopium, in other words, if you got $1,500 tops in your banking account and you're like, okay, this is going to turn my life around. It may or may not. I just don't want to give you that type of false hope. It's a good strategy, and I use it, and that's how I find all my trades. But if you only have $1,500 to your name, you might want to feed your family. If you're a guru surfer, if you follow me and 40 other people online, I would recommend that you pick 3 at most, because we're all going to have different opinions of what's going on and different time frames we're trading. If you follow more than 2 or 3 people at the same time, you're just going to be confused. If you can't make a decision, obviously it's not for you. If you like to make things more complicated for no good reason at all, heads up trading's already hard enough. If you make it more complicated, you're just going to increase your burn rate, okay? Yeah, I'm dyslexic, so that's actually a word. That's a holy grail seeker, which is really close to the same thing as a holy grail seeker, but evidently the PowerPoint spell check did not catch it. And since I'm dyslexic, I didn't catch it either. Let's see here. Who is this for? If you are serious about making real money in the markets, if you are looking for a proven system, if you can follow a simple set of rules and directions, and if you know that your success is tied to taking action, which means you're an adult that takes responsibility for your own actions, you and I will get along just fine, right? All right, so here's a fraction of what you'll learn in the #1 best-selling Ichimoku course on the market. 7 proven setups. One of them I've already shown you, so it'll actually be 6 proven setups because I already showed you one, but I just walked through it in more detail, and then I teach you 6 others. Trading rules and indicator settings, checklist with cheat sheets, with entries and exits, stop losses and targets, how to scan the markets with Ichimoku, how to filter out the best trades so that you never guess what to do next, how to avoid head fakes, and here is your offer. Ichimoku Cloud Trading Secrets goes for $197. I'm going to throw in 1, 2, 3, 4 live follow-up webinars just like this for the next 4 weeks. On Tuesday, we will get together, scan the markets, go through like a little bit of the drill that we went through earlier. It'll just be in more depth, like and I give you a list of things that I like and a list of things that I don't like. So I'm gonna give you 4 follow-up webinars like that for the next 4 weeks, so you'll have access to me for the next 4 weeks, which is a month. And then if you want to jump into, is the scanner included? Well, I don't know, Michael. Like if you've got TradeStation, it's included. Like the scanner may or may not be available to you depending on who you use. The Ichimoku indicator is available to everyone. TOS has one. I think we have a video on how to make it work on TOS. It works differently in TOS than it does in TradeStation, but we do have a procedure that we walk you through, like, hey, here's how you scan that in TOS. Also, 1 day of live trading in the live trading room. That's a total value of $682. Your special offer for today's webinar is $97, but there is a catch. It is only for the first 50 people that buy on today's webinar. So what you want to do is go to hubertsenters.com/cloudy. Let me grab this link for you real quick, and then I'll put it in the chat box so you can see it and grab your copy. It is a evergreen on-demand video series, so as soon as you grab it, you have access to it forever. It is not a subscription. A lot of people always ask me, is that a subscription? No, it's not. It's a one-time fee of $97. You can also call the telephone number. Jared's right behind me, so is Karen, at area code 859-963-3445. So hubertsenters.com/cloudy, area code 859-963-3445. So now what I'm going to do is I'm going to go over here, and I'm going to move this down here so you can see that. And there you have it. All right. So let me see here. Questions. Let me get to some of your questions really quickly here, and then we can do symbols, and then we can go through some more charts. I've got another, I think I can get 20 minutes with you for a Q&A if you need questions answered. All right. So let's see here. Great seminar. Thank you. May I ask the set of yeah, the slides are included with the course. Yes. Holy Grail. Yep. Holy Grail, dude. Can I see the bullish signals again? Yeah. Let me go find them real quick. me go find those for you. The bullish signals are right there. You go, Michael. They're the polar opposite of the bearish signals. It's available for toss. Yes, it's available for toss. If the RSI shows an extremely overbought level, would you still be bullish if the stock is above the cloud, or would you wait until it touches the standard line before going long? So I don't follow the RSI that much, Michael, so RSI wouldn't help me at all. Only bad thing with like an RSI or a stochastic, those things, you can always get more overbought and more oversold as time goes on, so it's not a perfect complement. It's not bad, it's just not my thing, but I wouldn't care if the RSI showed an extremely overbought level. I would still either buy the breakout or the pullback to the turning line. Yes. What does the ADX line stand for? Average Directional Movement Index. I think that's what it stands for, Steve, or Average Directional Index. Yes, it's a measurement of a strength in a trending or non-trending market is what it is. Yeah. Can I see a 10-minute screen of the NASDAQ? Yes, you can. So I got to do this over here. Let me look at the NASDAQ. I'll bring this over here. Oh, flip my screens around. Hold on just a second here. So I'm going to go NASDAQ on this tab here, and then it's hidden right up here. NASDAQ. On a 10-minute signal on the NASDAQ, so let's break down the NASDAQ. So the NASDAQ is non-trending, so you shouldn't be swing trading it, but you could day trade it. Now notice on the 60-minute sell signal on the NASDAQ, it had a 60-minute sell signal yesterday. How many days is that good for to the downside? According to our time frame selection, it should be 4 days, right? So we know we have a 60-minute sell signal here. So I know I should have 4 days of movement on the Dow to the downside. So there's day one, here's day two. And then I can complement that with the 10-minute signal. There's the 10-minute sell signal. So you had yesterday you had a pretty big sell-off, right? Boom, and then it went above the cloud. Then you wait for your next sell signal this morning. Right there's your sell signal right there. Please translate Tenkin, Kinju, and Chiku. Howard, you don't really want me translating that stuff. I have a thick Kentucky redneck accent. If I have to say Tenkin, Kinju, and Chiku, it's not gonna end well for the Japanese folks in the audience. All right, when I pull up the ADX on the stock chart, it diverts to an ADX 14. Is there a difference between 14 and 20? No. So when you're looking at the ADX, the ADX is a 14 period ADX. My threshold line is the 20 line. Okay, so the ADX is a 14 period. My threshold line for trending or non-trending is 20. Does that make sense? All right, somebody wants to see please show a 10-minute time frame when to enter ISRG. All right, so ISRG, let me move my little drawing screen away from me. So ISRG, number one, should we trade it, yes or no? I'm going to move this over here to the side so we can see better here too. Yeah, I would say, yeah, it's tradable. It's trending and it's above the cloud. It makes sense. So it's above it on a daily, above it on a turning line, 60 solid. The 10, in this case scenario, what you want to do is you're going to let it rotate. You see how you had a 10-minute buy signal back here? Boom, and now it went back down. You're going to wait until you get 1, 2, or 3 bars above the cloud right here. So I won't know where that's at, but if I had to guess, it's probably going to be around 1019.85. Should I change the ADX from 14 to 20? Just leave it. You should just leave it alone. Your ADX indicator power shift is really good for looking at ADX. Yeah, not everybody has access to it. So yeah, you can use the ADX and the cloud, or you can use the power shift. I use the power shift, but not everybody has the power shift. So that's why I changed it to ADX. You got it. How do you select long-term buys or long-term sales? You just use a longer-term chart. Just use a longer-term chart. So I wouldn't use a 60-minute chart to enter a longer-term hold. I would probably use a daily or maybe even a weekly. So if I was looking at in this example ISRG, back here it was its first buy. Right here is its first buy across the cloud. then it pulled back. There's its second, and then there's the third, right? So that's that from February 2017. That's a pretty good long-term hold from 700 all the way up to 1,000. That's not bad. Now, if you're using a longer-term chart, then you're going to use a longer-term hold. So if you're looking at a weekly chart, according to our math here on our calculation, a weekly chart we're going to hold for months of time. A monthly chart we're going to hold years of time. Yes, the webinar is being recorded. On TOS studies, the lagging line, the standard line, and the turning line are called Tenkin, Kinju, and Chiku, but I don't know what that is. Yeah, we go through it, I think, in the course, Howard. Let me see here. The yellow line is, all right, there you go. That'll tell you. The Tenkin is the 9, Kinju is the standard line, and the Chiku is the lagging line. So turning, standard, lagging. Does that make sense? Does that help you out? That should help you. They're way harder to say, though, than the English versions. Okay. All right. We only have 7 tickets left. 7 tickets left remaining. I've got another 10 minutes with you guys here. You guys want to go through some symbols? Let's go through some symbols. Jay just waved at me again. Look, there's 6 left instead of 7. 6. All right, so let's take a look here. You guys give me some symbols, and I will walk you through them and tell you what I would do with them. All right, I'm going to use a daily chart. It's just a little easier. Can I see the bullish sides again? Chris, I already put that up once, man. I'll do it again, though, real quick. Just take a snapshot of it really quick, and then I'm going to move on to symbols. Here you go. You got it? Let me know when you get your snapshot here. Chris Brock, you got it? And then I'm going to move on to, all right, cool, gotcha. All right, let's take a look here. First one is GoPro, so we're going to look at it on a daily. GPRO, GoPro is, it's a little sloppy, right? It is trending, it says it's going higher. Since it's below both the turning and the standard line, I would let go drop down to $8.41 and I'd buy it there. Okay, Halliburton, HAL. Halliburton is trending. It's below the cloud. Now this is going to be a week long. It's above the purple. The purple is going to drive it up to the bottom of the cloud right around 42, 42 and a half. And then once it gets there, I'd reshort it. Now, if it fails below 40.57, I would short it there. So I would either let it bounce to the bottom of the cloud or let it fail back through the purple. PCLN, all right. Price line is trending. It's a short with a stop of 19.21 and a target of 16.37. Steel. Okay, let's see here. This is a long with a stop of 26.48 and a target of $34. NTLA is trending. It's a long with a stop of 19.76 and a target of $28. AAL, I bet it's a short. Yes, it is. Look here, breakdown short here. That's a short with a target of $39. The targets are determined by the risk-reward ratio that I'm willing to risk on the trade. I cover it in the course, though. Also, in the course, I think there is a special module on parabolic SAR. So if any of you guys suffer from being a serial killer of profits, there's one module that I go through on how to use parabolic SAR. All right, UNP. UNP is non-trending, therefore I would leave it alone. I would let it cross the back above the cloud before I buy it, but right now it's non-trending. MSFT, Microsoft, non-trending, but it's probably going to go higher, probably $78. DIS, Disney, all right. Disney is trending. It has got a gap down because of earnings. If it broke $147, I would reshort that bad boy with a target of $95 even. FIT, F-I-T, little Fitbit. Fitbit is non-trending because the ADX is so low, but it's a long with a stop of 559 and a target of probably $6.73. Hubert, what time frame would you use for an overnight bond trade? So I would use all three time frames. I would use the daily and the 60 for that one, Charles. Yeah. DVMT, trending, great looking little long, stop at 72.19, target $90. USD CAD, this is a trending short with a target of 115 and a stop of $124.515. What's the difference between cloud and cloud full? I don't know, David. You talking about on stock charts? I don't know. I always just use the full cloud. Yeah, I don't know. I've seen it on there before, but I don't know what the difference is. GLD, that's obviously going to be a long because of gold. Trending, long, stop 124.55, target 135. All right, we only got 2 tickets left here. 2 tickets left. Where am I at? GLD, I did that one. Oh, BA is a long. I would let it drift back down to the standard line at 162.25. Stop loss would be 158.70, and the new target would be 183. Okay, Starbucks, SBUX. SBUX is a short. It's non-trending, but it is a short. It just crossed over yesterday. It's a decent short with a target of 52.60. Thanks. SPN is a short trending lower. I would short that right now today with a stop at the high of the day, which was going to be $9.48 and a target of $8. Hubert, would you please review the offer and if TOS scanner is included? So the TOS scanner is included in TOS. It's a different scanner than in TradeStation. TradeStation and TOS scanners are different. They work different, but they'll give you overall the same basic results, but they are different. Okay. The offer, I will go over it one more time as I've only got like 4 more minutes here. So you're going to get the #1 best-selling Ichimoku course on the market, 7 proven setups, trading rules and indicator settings, checklist with cheat sheets, with entries and exits, stop losses and targets, how to scan the markets with Ichimoku, how to filter out the best trades so that you never guess what to do next. And I'm also going to teach you how to avoid head fakes with this thing. All right. So Ichimoku Cloud Charting Secrets is $197. I'm going to throw in 4 follow-up webinars just like this. They'll be anywhere from 30 to 40 minutes a pop. On Tuesday evening, we get together and we scan all the markets like we did earlier. And then we scan all the S&P 500 stocks. And we walk through, and if you have any questions for me or anything, as soon as you buy it, you immediately have access. And we'll start this Tuesday. Like you've already got access to the on-demand version of the class. You take it, go through it, and I'll meet you next week. That's all for a $97 one-time fee. It's not a subscription. There was only a few left earlier. I don't know if there's any left. I hear Jared and Karen both on the phone right now. Deadline was the first 50 people. That's a lie. There's only, I think, 2 or 3 left right now. So most of you have already bought most of the tickets. And the TOS scanner, can we see before or ordering? I don't have TOS up on this screen, Michael. It's have you ever used TOS's screening tool before? So the material difference on the TOS screener versus the TradeStation one is TradeStation one, I already have to have all my stuff dumped into this and double left click to filter everything. The TOS one works by going, I want you to filter everything in the stock market that's above the cloud or everything that's below the cloud. Then it just spits you out a list. Does this work on Forex? Yes, it works on Forex. It sure does. All right, it is 11:58. I want to make sure that I keep us on schedule here and don't take somebody else's time. Dan, thanks for having me. I really appreciate it, man. Guys, good luck. I'll see you Tuesday. If you bought the course, I'll see you on the follow-up webinar this Tuesday. Good luck. Hope it helps, and we will see you on the next one.